Welcome to the Deep Dive. We're jumping straight in today. We're unpacking Advanced Micro Devices, AMD, their huge Q3 2025 results, and maybe more importantly, their look ahead, the guidance.
Yeah, that's the mission here. Go beyond just the numbers. We'll look at the record revenue, sure, and the guidance beating consensus. But what does it all mean? Does it satisfy that, massive market hunger for AI growth? That's really dictating everything right now.
Okay, let's start with those headlines then. Q3 performance. It was, well, undeniably strong. AMD hit a record quarter revenue, $9.2 billion.
$9.2 billion. That's 36% growth year over year.
And 20% just from Q2. That's sequential growth. And they didn't just meet what analysts expected, they blew past it. Consensus was, what, $8.74 billion?
Right, so a really decisive beat on the top line, and the bottom line looked just as good if you dig into profitability, especially non-GAAP.
Right, stripping out the one-off stuff.
Exactly. To get that cleaner operational picture, non-GAAP diluted EPS, earnings per share, landed at $1.20. That beat the street's forecast, which was around $1.16, but $11.17. So a comfortable beat and up 30% from last year.
Okay, so financially, a clear win. No ambiguity there. But the market reaction, that's interesting, isn't it? Despite this great quarter, the stock actually slipped a bit in after-hours trading. What's that tell us?
Well, I think it says two things. First, expectations are just incredibly high right now. For these big AI players, it feels like the market works on a perfection or panic kind of mode. Just beating isn't quite enough. They want to see that growth curve getting steeper and steeper.
Okay.
And second, it means the focus immediately snaps away from the quarter that just happened, straight to the guidance for the next quarter, Q4. That's all that matters now, the future growth rate.
We should also touch on the margins, though. That helps drive the profit, right?
Yeah.
Gross margin hit 54% non-GAAP. Flat year over year, but a huge jump from Q2, up 11 points.
Massive sequential recovery.
And Lisa Su, the CEO, she called it an outstanding quarter. Said it was driven by, quote, broad-based demand for EPYC and Ryzen processors and Instinct AI accelerators.
Yeah, that margin recovery is really key. It shows the product mix is shifting towards those higher value chips, server CPUs, high-end PC chips, and increasingly those AI GPUs. That sets a really strong base looking forward.
Okay, so that strong Q3 naturally leads to the next question. What about Q4? Let's get into that critical forward guidance.
Yeah.
What are they signaling about keeping this momentum going?
Well, the signal is pretty strong, honestly, maybe stronger than that initial stock reaction suggested. AMD's guiding for Q4 revenue around $9.6 billion, give or take $300 million.
$9.6 billion.
Yeah, the midpoint there implies roughly 25% year-over-year growth and still climbing sequentially about 4% from Q3. And importantly, that midpoint is above the LSEG consensus. Wall Street was only expecting about $9.15 billion.
So beat Q3, guided Q4 higher than expected. That sounds like a classic win.
It absolutely does. And the margin guidance was solid, too. 54.5% non-GAAP gross margin. That was right in line with what folks were expecting. But there's a really important detail attached to all this optimism, a geopolitical one we need to talk about.
Ah, you mean the China revenue thing?
Exactly. AMD made it very clear. Their Q4 outlook and also the strong Q3 results we just discussed. They do not include any revenue from shipping those Instinct MI308 GPUs specifically to China.
Wow, okay. That's huge.
It really is.
So they're basically telling the market, look, our success isn't dependent on that particular, complex market right now.
Yes, it gives you a clearer view of the underlying demand engine outside of China. They're showing strength despite those trade restrictions. That says a lot about how competitive they are in Western markets and with this massive US AI build-out happening. And, if or when things change with China or they make chips that comply, well, that's just potential upside not baked into these numbers.
All right, so the money's flowing in faster than expected and potentially with upside. Let's unpack where it came from in Q3. Which parts of the business really powered that $9.2 billion?
Okay, the strength really came from two main areas. First, and maybe a bit surprisingly strong, was the client and gaming segment. That hit $4.0 billion in revenue. That's up a massive 73% year over year.
73%, that's huge. Shows the PC market isn't just recovering, AMD's really grabbing share.
Definitely. And within that segment, client revenue, that's your desktop and laptop CPUs, hit a record $2.8 billion, up 46% year on year. That's driven by their latest Ryzen chips, the 9000 series, Threadripper 9000WX. They're making big inroads in premium PCs and business machines.
And what about gaming? That's usually consoles, right?
Still a big piece. Gaming brought in $1.3 billion. That was partly the semi-custom business, the console chips, but also strong demand for their Radeon gaming GPUs for PCs. They also mentioned a software win too. FSR4 adoption doubled. It's in over 85 games now.
That FSR 4 point, that's Fidelity FX Super Resolution, right?
Right.
That's actually pretty important strategically, isn't it?
Oh, absolutely. It's not just a feature. FSR is AMD's answer to NVIDIA's DLSS upscaling. Getting developers to adopt it, getting it into more games, that's crucial for making their graphics cards competitive, especially for gamers focused on performance. It helps level the playing field.
Okay, let's switch gears to the engine of the future, arguably.
Right.
Data center. Was that the biggest slice of the pie?
It was the largest segment, yeah, $4.3 billion, up a very healthy 22% year over year. The growth here came from two main things. First, just massive acceleration for their 5th-gen EPYC server processors, codenamed Turin. Turin adoption is happening really fast. It actually accounted for nearly half of all EPYC revenue in Q3.
Wow, half already.
Yeah, shows the big cloud providers and enterprises are moving quickly to that new generation.
Okay, that's EPYC. What was the other driver?
The other big one was the sharp ramp-up in sales of their AMD Instinct MI350 series GPUs, the AI accelerators. So you see data center revenue becoming less reliant just on CPUs and more balanced with these high-margin AI chips. That strong segment performance pushed data center operating income to $1.1 billion. Even a smaller embedded segment, while down year over year, actually grew 4% sequentially, seeing demand in places like aerospace and industrial.
Interesting. Now, before we jump fully into the AI wins, there was one kind of curious detail that came out. Amazon, obviously a huge cloud customer. They disclosed they sold off all their AMD shares, like 822,000 shares gone by September 30th. How do we square that? A key partner selling the stock just as AMD reports record numbers.
Yeah, that definitely raises eyebrows in the market. It creates a bit of dissonance. I mean, often these moves by big holders are purely financial portfolio decisions. Maybe taking profits, maybe strategy unrelated to AMD's performance, but still, it plants a small seed of doubt. Did Amazon see something different long term? We don't know. But it's hard for the market to completely ignore it, even with all this positive technical news.
Right. Okay, well, putting that market noise aside for a second, let's pivot to segment 4. This is where those sky-high expectations really come from, right? The AI trajectory. This is where the numbers just get massive.
Yeah, this is the core story driving AMD's future valuation now. The strategic wins announced are just enormous, starting with that headline deal with OpenAI.
6 gigawatts of GPU deployment. I mean, it's hard to even picture what 6 gigawatts of compute looks like. What does that actually mean financially, this OpenAI partnership?
So they formalized this deal. 6 gigawatts of AMD GPUs for OpenAI's next-gen AI stuff. The first gigawatt starts deploying in the second half of 2026 using the MI450 GPUs. And Lisa Su, she didn't mince words. She said this partnership could generate, quote, well over $100 billion in revenue over the next few years.
$100 billion from one partnership over just a few years. Okay, let me push back a bit there. How realistic is that? I mean, can they actually make that many chips? What are the hurdles?
Look, it's an incredibly ambitious forecast. It assumes sustained, unprecedented scale-up. To hit anything like that, AMD needs perfect execution. Manufacturing yields have to be great. They need to secure enough high-bandwidth memory, HBM, which is already tight. They need to scale up advanced packaging like CoWoS. That $100 billion figure isn't just about selling silicon. It implies they've cracked the code on manufacturing and supply chain bottlenecks that are limiting the entire industry right now. It puts immense pressure on their operations team.
And it's not just OpenAI making these huge bets, is it? We're seeing other big cloud players signing up too.
That's right. Oracle Cloud, OCI. They're planning to deploy 50,000 AMD Instinct MI450 chips, starting Q3 2026. And crucially, they mentioned using AMD's Helios rack design. This move to selling full racks is really strategic.
Why is that rack scale approach, like Helios, so important?
Well, selling individual GPUs is one thing, it's volume. Selling a whole pre-configured rack system, like Helios, that means AMD is delivering something much more complete. Optimized, integrated. It supports standards the hyperscalers use, like Meta's Open Rack Wide Spec. For these big customers, it makes deployment, cooling, power management, all of that much simpler at huge scale. It's this kind of system-level thinking that positions them for those tens of billions in annual AI revenue they're targeting by 2027.
Makes sense, but hardware is only half the equation in AI, right? The software, the ecosystem, that's critical. How's ROCm doing?
Yeah, software is absolutely the key. RCM is AMD's big push for an open development platform. They need to attract developers. They just put out RCM 7, and they're claiming significant performance jumps, up to 4.6 times higher inference performance compared to RCM 6.
And just to clarify for listeners, ROCm is AMD's open source competitor to NVIDIA's UDA, which has been dominant. So that 4.6 jump, if it holds up, makes it much easier and faster for developers to actually use AMD hardware effectively. Weakens that CDA moat.
Exactly. RSCM7 is all about lowering the barrier for developers to switch or use both platforms. And beyond the software, we're seeing validation at the highest levels too. National labs, supercomputers.
Ah, yeah, tell us about those supercomputing wins.
So AMD is working with the U.S. Department of Energy on two big next-gen machines. There's the Lux AI supercomputer. That's going to be the first U.S. AI factory supercomputer running on MI355X GPUs. And then there's the Discovery supercomputer planned for 2028. That one will use future MI430X GPUs and also their next-gen Venice EPYC CPUs. Wins like these show they're helping define the architecture for sovereign AI, for big science. It proves their tech isn't just for commercial cloud, but for really critical national infrastructure.
Okay, let's pull back and sum this up. What's the main takeaway from this deep dive?
I think the core conclusion is, look, AMD's Q3 showed they've successfully stepped up their game in the traditional markets. PCs, servers, the foundation is strong, they're taking share. But the whole investment story, the excitement, it's completely shifted to AI now. It's about that forward visibility, those multi-gigawatt deals, the strategic shift to selling whole rack systems. That gives them huge long-term momentum. It really solidifies their position as a central player in building out the world's AI infrastructure.
But that phenomenal scale you mentioned, especially those gigawatt-level deals like with OpenAI, it does raise a really profound question for the whole industry, doesn't it? This isn't just about making chips anymore. It's about physics. It's about infrastructure.
It really is. And that leads to the final provocative thought for you, the listener, to mull over. The sheer scale we're talking about now, these partnerships demanding gigawatts of power, it implies extraordinary stress on everything else: power generation, cooling systems, manufacturing capacity, the entire global supply chain. So what fundamental shifts are going to be needed in our power grids and industrial capacity just to meet this unprecedented demand for AI compute? Is the world truly ready for growth that we measure not just in dollars, but in gigawatts?
A huge question for an accelerating future. Thanks for joining us for this deep dive into AMD's latest chapter.